In this video, traders, we're going to look at the difference between simple trading strategies and advanced. Stay tuned. Hey guys, a warm welcome to you. Alright, so simple trading strategies, advanced trading strategies, we hear this all the time. So what's the difference between the two? Now, first things first, this is super subjective, right? One person's simple strategy is another person's advanced, and vice versa. So I'm just going to put stuff into broad categories and segment off simple and advanced into the way I think that it's framed. Now, I also want to add that, hey, we are not, in this video, all we're interested in, and generally you will notice this video, as we're interested in as traders, is does the strategy make money? I don't care if the strategy says buy at 10 o'clock in the morning, every morning, and the strategy works. That's a simple enough strategy for me, and if it makes money, then that's good. As long as I can cap the risk, I can manage the risk, I know where I'm going to take the trade, I can frame the trade, all that kind of stuff, that's fine. If it has to become more advanced, we'll talk about that, so multiple steps potentially, then that's fine as well. So that doesn't necessarily mean that you can't make money with both. However, if we look at the simple column, stuff like a moving average crossover, whether that's a fast crossing over a slow or price crossing over, is very simple, and on its own, if you're just trading it every single crossover over a long period of time, unlikely for it to be profitable. For it to be profitable, these simple strategies generally have to have another kind of extra thing on them to make them, to use them in the right conditions. You know, hey, we've got to use the right tactic for the right conditions. Moving average crossover is super simple, but it doesn't work if you do it every single time throughout every single market condition. Okay, we need something additional which might then bring it into the advanced, add another layer of something we need to do to make it perhaps a profitable strategy. Something like an overbought, oversold fade, CCI, RSI, stochastic, you know, the kind of thing, an indicator that is generally categorized as an oscillator, indicates an overbought and oversold market. Very simple trading strategy, selling at overbought, buying at oversold. In a range band environment, double thumbs up, works great. But you need something in addition to filter for that range band environment. Otherwise, if you're constantly buying overbought, buying oversold, selling overbought, you're gonna get run over when there's a monster trend. So the simple doesn't work just on its own. And something like a breakout. Again, that's a very simple strategy. We see that in kind of page 2 normally, the trading strategy textbooks. You've got a level, market goes to new highs, you're buying those new highs, you're buying a 20-day high. That was the turtle trade, wasn't it? It was a 20-day high. Can't remember the rules of it, but historically, a lot of people made a lot of money because markets were trending, buying breakouts. Very, very simple set of rules to it. If price goes above high, then buy. Very simple. Then we've got something like a support and resistance fade. I still class that as a simple strategy because ultimately most traders know how to draw support. Most traders know how to draw resistance. Most people know that when price hits support, the likelihood is, if the support is correct, it's going to hold. Now, again, why is it in the simple category, not the advanced? Because you could argue, well, you don't know how to draw support, and yes, possibly, but my kind of comments still run true with this support resistance fade. If you take every single support and resistance trade, you're going to lose money. I believe you'll lose money because, again, the trend market, you're going to get hammered. Same, it's just the opposite of a breakout, right? Two completely different things. It's like we've got different categories for them, but it's just doing the opposite thing. There's your support level. Bang, it's gone through, it's a breakout trade. There's your support level, it's a downside, gone, it's gone through, it's a breakout trade. There's your support level, you're fading it, it's now a fade trade. Both are simple, but they're two categorized differently. We need something else to help us determine which one to use. And something like a double top, head and shoulders, that kind of stuff, very simple. So what's the point in them if we can't just trade them on their own generally? They are generally the foundations that we need to then create more advanced strategies. Now, I did say at the beginning, not all simple strategies are losing strategies. Plenty of simple strategies that are winning. And my kind of evidence is this would be a nice winning strategy in a bull market, moving average crossover, but it's not going to sustain you forever if you did a moving average crossover forever. So the point of having this simple, guys, is that it plants the seed of something that works well in certain conditions, and then you go, right, I know the conditions that works in, let me add parameters that highlight those conditions for me, so I'm giving myself the best possible chance. We know moving average crossover works well during trend range environments. We know it works awfully in range bound environments. So perhaps we could add something like an overbought or oversold condition, something like an ATR, something extra to it. So I've kind of got off a tangent because I've not covered this, but let's go into look at the advanced now. So advanced could be support and resistance, which is our simple foundation, with say a pin bar. Pin bar being that test above that you get that pin. We know the kind of stuff, guys. You know, that kind of move above a resistance level. So resistance on its own, but that added to it gives us the ability to quantify the risk, all this kind of stuff, puts it a little bit into advanced. I know some of you will say, well, that's not advanced, it's very simple. Yeah, it's subjective, guys, I get it. You know, maybe we could say advanced is multiples of these, some sort of price action. Perhaps the ultimate advanced is reading market depth, reading the tape, looking at the order flow as it changes and making a decision based on that. That's probably about as advanced as it gets for humans. There are probably some more there, but you get the idea of the level. But if we dial it back a little bit, just looking from a charts perspective, something like an engulfing plus support and resistance, we're adding an extra layer of price action. Candlestick pattern we know is pretty effective. There's a little idea there's potentially something there, plus support and resistance. Opening drive, pullback. So again, that's watching that momentum on the drive, gauging the pullback, deciding we're still buying a pullback, which is pretty simple. But on the open, we're adding more likelihood that there's going to be a bit of aggression there. Exhaustion flush, one of the things that I talk about quite a lot, and that again is quite subjective and advanced. So we'd have some criteria that say, well, we're in exhaustion territory now, not in the middle of a range, and yes, it's fading a key level, but how far is it going to go through? What are we looking for with the flush? There's a little bit more decision-making process there. We've got a volume to look at, got the speed of the move, got this, that, the other. There's more things to take into account that gives us a bit better opportunity. And then something like a news trade, so trading off the news, fading some kind of spike on low liquidity, relatively advanced. The thing is with these guys is we don't want to add too much. There's a sweet spot, as there is with a lot of things in life. If we start adding plus this, plus that, plus the other, plus everything else, everything's got to line up, we're probably never going to get a trade. And when we do get the trade, we'll feel so excited that it's the trade of the decade, we might push too many chips in. And so we've got to have enough filters that say, well, yes, the conditions are right for this, and now I'm going to utilize something simple to bolt onto it to create, yes, advanced in inverted commas, but something that's a little bit more substance to it, that's got the more chance of success than just your standard moving average crossover, all the kind of textbook 101 type of things. So be on this side if you can. Advanced, yes, arguably, maybe simple plus would be a better thing, but adding what you know works in conditions with something that identifies those conditions is potentially the better way to trade, in my opinion. All right, guys, take care. See you next one. Bye-bye.